Hello and welcome to Pro Trader Strategies Market Commentary for Friday, June the 29th. It is the end of the quarter, which means earnings are right around the corner. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. And please remember the past performance of any trading system or methodology is not necessarily indicative of future results. All right, guys, sorry about getting this out a little bit late, a little bit crazy today, but I wanted to talk about a few things anyway. We did get some good economic data coming out today. I mean, not necessarily good, but we're talking pertinent economic data, I guess. And we got core PCE, which is personal consumption expenditures. This is a pretty important number, generally speaking. Came in at 0.2%. In line with the expected 0.2%. So that core PCE excludes food and energy, and we know that energy has been going higher. If you've been looking at the pump, you can see that that's going on. That does not come into effect with that number there, so that's a little bit deceiving in a sense. And then we got personal spending came in at 0.2%, expected to be 0.4%, so a little bit lower than expected there. Personal income came in line with expectations at 0.4%, expected to be 0.4%. Both of those numbers were actually revised down on last month's numbers by 0.1%, so that even makes those numbers look a little bit worse, to be quite honest. And then we got Chicago PMI came in higher than expected at 64.1. It was expected to be 60.1, so better than expected, and it was like a 6-month high, so that looked pretty good on the economic data point. University of Michigan consumer sentiment came in at 98.2, still pretty decent. It was expected to be 99.1, so a little bit lower than expected on most of the economic data today, but pretty decent with that Chicago PMI. So that kind of all comes out even, I guess, at the end of the day. We got crude oil moving higher today. Remember, I'm going to talk about some USO, though, that I have on, and I'm going to write it out. I'm a little bit past where I was looking to get out, but I've been watching this, and crude oil wanting to come up and test this 78 Fibonacci level was what I was looking for. So I'm going to ride this USO out until I see this market look to turn around, and I'll talk about that a little bit more here in a minute. But gold finally finding a little bit of a bottom here. Now, what's been going on basically with these tariffs is we're seeing China come out and talk about devaluing their currency. Well, if they start devaluing their currency, it's actually going to drive the dollar higher. So in anticipation of that, I think a lot of people are actually taking that money and investing in the US dollar, driving that higher right now, and rather letting gold suffer due to the rising dollar here, and not anyone really rushing to arrest this slide. I think we might start seeing a little bit of a bottom here right around this 50 Fibonacci. I think we're going to start seeing it. It's gotten a little overextended to the downside. It's kind of been lost in this shuffle on this currency trade, I believe. So gold might start to turn around. We'll see. And this Bitcoin, you guys, it's just not getting that kind of market action I'd like to see. If we look at the volumes down here, just really not seeing anything like there's any interest in it right now at these levels. So it might very well start to really peel if we get below this support level, which we pierced below it today. We could start seeing some ugly action in Bitcoin. I think we just need to see a little bit more volatility to create that bottom, and this little no volume move is not going to get that done. So we got the Dow Jones Industrial Average up another 176 points. It's well off its highs, but got above the 200-day moving average. It didn't look like it was going to be very good, and as a matter of fact, I thought today I was going to be talking about a continuation to the downside. I don't think we're out of the woods yet. It still seems like we're in this little trend channel here, but we could start seeing the market get a little comfortable here. I don't think we're going to see any sharp sell-offs. The economic data has been pretty decent, but I think we could easily see us trend sideways to slightly down right now, which would be a great time for the straddle to throw that in there that we talked about yesterday in the webinar. We got NASDAQ slightly up on the day, 27 points on the day. Flight to the Hamptons. Look at this volume, just died off today almost to nothing. Summer markets, people on Fridays just pull out and the volumes die up. So we're getting a little bit of sell-off towards the end of the day here with an overnight market rally. There's just not a whole lot of volume or action going on right now, so the market's pretty slow. That's why I've decided not to put anything on today. I've just kind of been watching the markets, watching my positions. There's a couple of them. Procter & Gamble, this one's like pinching me right now. I am short the July 77.5 calls. If you remember, I was looking for this support here. I collected a 45-cent credit, so that told me, well, if it comes up here and tests me, I'm going to be close to where my break even is on that test. So I'm letting the probabilities and this resistance area try to play out. I am close to pulling the trigger on this, but I'd like to see a little bit of rollover. The gamma is going to help me closer to the expiration of. So the closer we get inside of here, that gamma is going to start helping me. So if we get a little bit of a correction, I could turn this position around rather quickly. But right now, I'm holding on and hoping that this resistance that I pulled out that lines up with the value area low holds for right now, and we get a little bit of a rollover, and I'll look to try and roll out of that one right away. But right now, being tested on my 77.5 calls, they're slightly in the money. So, and we talked about that a little bit yesterday in the webinar as well, because we use this as an example for using the strangle if you would want to. And then the other one was Deere. I wanted to talk about with Deere. I am short the there we go. Everything's moving a little bit slow right now. So July, I'm short the 125.5 puts. Now we've been seeing this little bit of slide. I think we're getting a little bit. Yesterday it was looking like we were getting a little bit of a bottom. We're getting a little 3-star here. So I'm hoping that's going to be a reversal here where we've kind of built a little solid bottom here. These two weren't looking too good together here. What was that, Wednesday, Thursday? It looks like a continuation pattern, but today we got a little move higher. I was thinking about covering these, and but I think we're going to start seeing a little bit of a bottom happen here, and we might get a little bit of a push higher with this Deere trade. So I'm going to stay in it right now. Like I said, I'm short the 125 puts, which is way down here. So I've got quite a ways to go before I have to worry about it too much. But I wanted to talk about it because, if we start breaking this little pattern and continue on, I might seriously think about pulling the ripcord on this trade. I thought we found a bottom, but it may not happen. And then finally, USO has finally turned around. Remember, this one was not looking too good, but with this rally, I got into it here thinking we were going to get a rally. Never got it. Wasn't looking too good. I'm long the July 14 calls. So took a lot of heat, was thinking it wasn't going to work out, and we've gotten the last couple of days a nice little rally. Like I said, this pattern does not look like there's any stopping before it gets to this Fibonacci level. I'm going to hold on to these for a little bit longer, but I will have a quick trigger finger if we start seeing oil rollover or anything else. All right, that's all I got for you guys today. I just wanted to talk about a couple of my positions to keep you guys up to date as to how I'm playing these out, and sitting on my hands today for the most part. So I hope you guys have a great weekend. That's all I got for you, other than if you can't take that, take it easy.